Welcome to Module 4 of Accounting 332. We've made it through 3 weeks. We're into our 4th week now. So this module covers first an overview of a bunch of different entity types. So we've been talking about different entity types, corporations, partnerships, LLCs. We're going to spend a little more time on those in Chapter 15. It's very much an overview chapter. There's not a lot of really important definitional things you need to take away from it. And then we're going to go right into corporations. So we spend the rest of this module working through the corporate entity form, and then the next module we'll deal with partnerships and S-corps as our flow-throughs. Okay, let's start with the learning objectives. We're going to discuss the legal and non-tax characteristics of the different types of legal entities. That's actually this video. We'll talk about the different types of entities and how they're treated for tax purposes. We're going to try to identify fundamental differences in the tax characteristics across these entity types. And then we're going to dive into corporations. So we're going to talk about the corporate income tax formula. We're going to compare and contrast the corporate tax formula to the individual tax formula. And we're going to talk about special considerations that relate only to corporations. Then we'll talk about some of the compliance function that relates to corporate tax returns. We will not calculate a corporation's alternative minimum tax liability because that code section has been repealed. But we will talk about corporate distributions for tax purposes. And in order to do that, we're going to need to understand both current and accumulated E&P. And then we're going to apply those rules to understand how to characterize corporate distributions. And lastly, we'll talk about what are the tax consequences of the organization of a corporation. So when I form a corporation, what are the tax consequences? All right. So we're going to start this particular module with a story. So Hermione is a lifeguard in San Diego. She has a business idea. She's going to create a network of trained lifeguards throughout the U.S. And when some city, state, private club, even a person in their backyard pool needs a lifeguard for some form of temporary duty. So, for example, to fill in for a missing employee, if they're hosting a unique event and they want a lifeguard in place, Hermione's team of lifeguards will be there. So she starts her business as a sole proprietorship, which means that Hermione and the business are one. There is no separate entity. If you were to ask one of Hermione's employees who they work for, they should say Hermione. When the business purchases goods and services, it's Hermione that's buying those goods and services. It's Hermione that's responsible for ensuring the bills get paid, the lifeguards get trained, and the company is marketed to customers. Speaking of marketing, Hermione recognizes early on that Hermione is a bad name for her business. So she decides she's going to operate under the name Hermione's Flying Lifeguards. In California, she's required to file a DBA, or doing business as, filing to show that she's operating under a fictitious name. You do that with the county in which you're located. But underneath it all remains Hermione as the sole proprietor of this business. So as the sole proprietor, her income and losses from that business, they're accumulated and reported on a Schedule C, which becomes directly part of Hermione's individual income tax return. The income and losses simply flow through. Now, because Hermione has employees, she does obtain an employer identification number, which is a 9-digit number issued by the IRS. It's a little bit like a Social Security number for employers, but it's still just Hermione. Anything that happens to the business, that's on Hermione. If the business doesn't pay its bills, they're really just Hermione's bills. If the business gets sued, it's really Hermione that gets sued. So Hermione's business grows, and she finds that she's struggling to manage the entire business herself. She needs help, and she needs capital. Her employee and customer base has grown across the U.S., and she needs bigger and better training facilities for her lifeguards. She's grown tired of renting temporary pool space for training, and she's thinking she'd like to build her own training facility. And the estimated cost of something like that is $1 million. She's simply not comfortable taking on all that debt associated with building a new training facility by herself. So she seeks out another individual to help her and finds a rich investment banker named Ron. So Ron likes what he sees in Hermione and her business. He sees serious growth potential in the business and wants to share in some of the future earnings. Hermione recognizes she might be willing to give up some of her share of the earnings for an injection of capital into the business, and she and Ron enter into a partnership. Both Hermione and Ron are astute investors, and a simple handshake will not do. So they prepare an agreement between themselves known as a partnership agreement. In the partnership agreement, they define the rights and responsibilities of each partner as an owner. Because this agreement is between two private parties, there's quite a bit of flexibility in the way Hermione and Ron arrange their business affairs. For example, Ron realizes that the entire training facility is being built using his capital. So as part of the partnership agreement, he claims the right to a reasonable return on his $1 million of capital by including a clause that instructs the partnership to allocate him a 6% return on his $1 million investment before any other allocations to any other partners, which is just Hermione. Hermione understands Ron's position and sees how if she simply borrowed the money, the terms of the loan would be similar to Ron's terms, and so she agrees to them. But she counters by demanding that the business is her only form of income, and so the next $100,000 of income gets allocated to her. Ron agrees, and with those demands out of the way, the rest of the income and the costs are going to be split 50-50. Both Ron and Hermione, as general partners of this partnership, have all the rights and privileges of ownership, much as if they were the only owner. Of course, they're also bound by the terms of their partnership agreement. Once the partnership agreement is hammered out, Hermione's Flying Lifeguards contributes all of its property, and Ron contributes $1 million to the partnership, and the partnership is formed. Now, in some states, the partnership agreement is filed with the state, but in most states, no formal paperwork is required, although it is often recommended. Hermione's Flying Lifeguards continues to grow and operate profitably. But a couple of years ago, there was an incident. During an event in which Hermione's Flying Lifeguards were responsible for pool safety, a swimmer died. The results of the police investigation showed that the swimmer had suffered a heart attack while swimming and died immediately. Thus, Hermione's Flying Lifeguards were not held responsible for any negligence, and the family of the deceased did not pursue any claims in court anyway. However, the event was a wake-up call to both Hermione and Ron. They are both liable for any debts of the partnership. And even though they carry insurance, the risk of having to sell their homes or other personal belongings in order to cover the business's debt, well, that frightens them. Well, and especially Hermione, because remember, well, Ron's wealthy. As a result, Hermione and Ron look for another way to own and operate their business. Their friend and attorney, Neville, introduces Ron and Hermione to an entity called an LLC, or Limited Liability Company. Neville points out that one of the great features of an LLC is that, like a corporation, the owner's liability is limited to their investment only. So to make it perfectly clear to Ron and Hermione, Neville explains that if the business were to go belly up or get sued or find itself unable to pay its debts, the creditors could take everything from the LLC, but they would not be able to touch Ron or Hermione's personal assets at all. The LLC sounds very appealing to Ron and Hermione, and it has the upside of the flexibility that's very similar to the partnership, meaning Ron and Hermione can keep those unique terms of rights of ownership that they worked out in the partnership agreement, except now it's called a members agreement because LLC owners are called members. Now, Neville is not disappointed with Ron and Hermione's choice, in part because LLCs are generally required to file paperwork with the state, and so he sees some extra attorney's fees coming his way. Based on Hermione and Ron's innovative ideas in management, Hermione's Flying Lifeguards ends up crushing
In fact, its growth outpaces even Ron's ability to capitalize the business. Ron and Hermione also simply aren't as young as they once were, and maybe even thinking about joining each other in a more intimate partnership. As a result, it might be time for them to sell the business. So they go back to Neville, who explains that the LLC has served its purpose well. They enjoyed limited liability, and the business continued to be treated as a partnership for tax. But it may be time for the next step, a corporation. Hermione and Ron are puzzled by Neville's advice and cry, "Corporation? That seems so inflexible." And Neville explains to them that the corporate form has been around for a very long time. And as a result, the rights that come with ownership are extremely well understood. The rights of common stock ownership are treated the same in most states. And the largest source of capital in the world, the U.S. stock market, works best using stock. He explains that if you want the ownership of the business to be free and transferable between owners, so that owners can come and go as they please, which creates the sort of liquidity that investors look for, that the corporate form is the optimal choice. Investors also love the limited liability of a corporation, which is to say that like an LLC, the most they can lose is their investment. Neville explains that most great companies listed on the U.S. stock exchanges do so in the corporate form. And since the market is a great place to raise capital through an initial public offering or IPO, the corporate form is in Hermione's Flying Lifeguard's future. However, not all the news is good, explains Neville. There is a cost to these great benefits of entering the public capital market. First, corporations require articles of incorporation, corporate bylaws, a board of directors that has to meet at least annually, and a handful of other legal requirements that may seem perfunctory, but they are required. Because stock ownership rights are rigid, which helps create that liquidity and safety investors want. Because of that rigidity, there is little flexibility in terms of ownership rights. Neville also points out the impracticality of rewriting the partnership or LLC agreement each time a new owner would come and go from the business. So Ron and Hermione decide to contribute all of the LLC's property to the new corporation. The corporation then goes public, and they cash out as millionaires. The end.
What is that mysterious ticking noise? Not over here, not over there. Kind of catchy. Snipe, snipe, Severus Snape, 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 Severus Snape.
Dumbledore!
Snape, Severus Snape.
Dumbledore!
Snape, Severus Snape.
Dumbledore!
Snape,
Ron!
Severus
Ron
Snape.
Weasley!
Snape,
Ron!
Snape,
Ron!
Severus
Ron
Snape.
Weasley!
Snape,
Ron!
Snape,
Ron!
Severus
Ron
Snape.
Weasley!
Snape,
Ron!
Snape,
Ron!
Severus Snape.
Dumbledore!
Harry Potter, Harry Potter, Harry Potter, Harry Potter, yeah, Harry Potter, Harry Potter, Harry Potter, Harry Potter, that's me, Snape, Harry, 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 Harry,
Dumbledore! Hermione!
Snape,
Harry
Potter,
I'm Harry Potter,
I'm
Harry Potter, Harry Potter,
singing our song
all day long at
Hogwarts.
I found the source of the ticking! It's a pipe bomb!
Yeah!
Voldemort, Voldemort, ooh, Voldemort.